You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
All right, everybody. That music means it is time once again for the old OPR, aka Options Playbook Radio, the program for you out there, the busy retail stock trader, maybe looking to learn about options, maybe already trading them. Either way, we got you covered with some great offensive and defensive plays that you can utilize in your own portfolio. And if you're saying to yourself, what's that voice doing here on this program? He doesn't belong here. Well, once in a while I do when we do these very special episodes of OPR. But usually this is the portion of the show where your regular host takes over, a.k.a. Mr. Brian Overby, the senior options analyst, a.k.a. the options guy over there at Ally Invest. Mr. Overby, welcome back to your own program, sir.
Oh, it's always great to be back. And you are always welcome, Mark, without a doubt.
Why, thank you, sir.
Because whenever I hear your voice, that means we're going to answer some listener questions. And that means that it's also time to huddle up.
It's time to huddle up and answer questions about your favorite options plays. Submit your questions via twitter.com/options, facebook.com/theoptionsinsider, or questions at theoptionsinsider.com.
All right, everybody. Time to answer some questions. Our cup overfloweth with questions out here these days. So Brian and I doing a rare double duty huddle appearance 2 weeks in a row here to keep your questions answered and your curiosity sated here. Let's kick things off as we like to do these days. These are dire times out there. Let's get a little bit of love out there on the show. Brian, this guy's right up your alley. He's a fellow boater, it seems. The name sounds kind of familiar. Maybe we've had other boat-oriented. Maybe he snuck in here twice with more love. Either he really likes the show. Either way, we've got Boatlog leaving us a 5-star review over there on the iTunes. By the way, listeners, if you like what you hear, keep those reviews coming. Doesn't have to be iTunes. It could be wherever you listen to the program. Could be Spotify. Could be Podbean, Stitcher, wherever the heck you get it. Make sure you leave those reviews so other folks can continue to discover this program. These are trying times. Options education is more important than ever, particularly a reliable source of said education. We're seeing a lot of you flocking to the show, but more ear holes are always welcome. So leave those reviews wherever you listen to this program so new folks can continue to discover this program, just like Boatlog did here. 5-star review in iTunes says, great podcast, perfect length, 15 to 20 minutes. If you want to learn about all the basics of options trading and the things to watch out for when trading any strategy, wow, this is the podcast for you. So, Brian, they can turn to you for any trading strategy. That's high praise from Boatlog, sir.
Well, I just love the name boat log, of course. I lived on a boat for a year or two, so I always like to see fellow boaters that are out there. But well, that I really appreciate it. It's always great to start with a little love before we get into the listener questions.
Yeah, listeners, if you don't know, Brian is the Sonny Crockett of the Options Insider Radio Network. He had the boat life going. For all he was missing was the crocodile on his boat, and he was all set.
Well, then I also had a little toddler that came around, and that changed those plans a little bit. But with that said, it was a great time, and I would love to do it again at some point.
Yeah, kids tend to put the kibosh on the hashtag boat life.
Yes, that is true.
Maybe one of these days, certainly on the alligator side of it, wives tend to frown upon such things. All right, let's move on to our next question. This guy sounds familiar. Frequent commenter for all of our shows, including OPR, and questioner Baiju Thomas, coming from across the pond, I do believe. He says, hi, Mark. Well, hello, Baiju. He says, I hope all is well. Thanks for all the work you and the team put in to explain the inside workings of the options world. Well, you're welcome there, Baiju. His question, it says, do you ever worry about the recent spike in retail accounts being open and the markets going insanely one way up? Do you worry that this might have a Bitcoin/tulip-like end? Well, Bitcoin isn't quite there yet. It's actually been looking pretty good to the upside of late. So I'm not sure if I'd put Bitcoin in the tulip camp quite yet, but I digress. He goes on to say, have you heard from your broker friends about this and how they plan on maybe taking in additional margin/blocking naked position taking or collateral to cover black swans should there be one? Thanks, as always. Well, an interesting question, Bitcoin versus tulips aside. Brian, you certainly qualify as one of my broker friends. So what do you have to say here for Baiju? Is this something you guys are talking about behind the scenes? We've seen the story swirling endlessly. We see it here anecdotally on the network. Retail is playing faster and hotter and heavier than ever before. This is obviously where markets are also at pretty frothy valuations. Are these some conversations you guys are having behind the scenes over there at Ally in case maybe you have to pump the brakes a little bit?
Well, managing risk is always a conversation, and it's a continuing conversation. Every day that goes by, you look at different positions. If you're getting a little lopsided on this position versus that underlying. So you do always have people in the far back of the room looking at the overall big picture of the firm. But as far as doing anything different because the volatility is high or having a view that the markets might quote unquote crash. Now I'm saying that's the listener's view, not necessarily my view overall. But if you're looking at it from that perspective, that means that when the markets were quote unquote normal, well, then you really weren't managing your risk as well. So at all times at a brokerage firm, you're always going to assume the worst and hope for the best overall. So that's the only way that you can really manage risk and manage it well.
And hopefully the folks out there in these massive retail accounts, they're listening to a show like this or getting options education from somewhere, maybe their broker or from our friends at the OIC or somewhere out there. And they're learning that they can't just ride the market up and then ride it right back down and just do nothing but buy and hold stocks all day. Hopefully they're learning they could be a little bit more active. They could do things like we've advocated many times on this program, play defense with some hedging, collars, all the various strategies we've outlined here before in the past, ratio, put spreads, etc., and so on and so forth, so that they can do something, Baiju, to step in and intervene. And so we don't see people just riding the market up and then riding it right back down again. Hopefully there's some intervening steps, and that's quite frankly why we're here, to help you learn about those intervening steps and what you can do so you're not just yet another lemming going off the cliff when the tulips we'll leave Bitcoin off there for now because I know that'll get people angry. When the tulips have their inevitable end. All right, next up, Brian. This is an interesting one, kind of a quick, timely one. I think this came in right before expiration last Friday, so I don't know how it worked out for him. I'd like to know. But it's an interesting educational and thought topic nonetheless. This comes from Stoot 2014. Hopefully I'm pronouncing that correctly. He wants to know, I'm wondering if you can help me with some options info. I'm currently holding $6 KODK puts that expired today. So yeah, we got to you a little bit late here, but that's what happens when you come in for these shows like this, I think we might have responded to you directly on social media, so hopefully we got you there. But the stock is currently trading at $6.02. Isn't that always the case? Hovering right at the strike. He says, but I'm fairly confident that it will go below $6, but not confident enough that it will reach my break even of $5.47. So obviously he paid 53 cents for these KODK $6 puts that expired last Friday. He says, can I buy the stock at the current price and exercise the option as long as it is at or under my $6 strike price? If not, are there any options other than just losing the money altogether? Please help. Well, this is an interesting one, Brian, because he's kind of conflating a couple of different things. He says he thinks the stock's going to drop below $6, but he wants to buy the stock. I'm not sure why you'd want to do that to begin. You have the puts. You want that move to go. Unfortunately, if it doesn't go far enough to your strike, that's not going to do it for you. But one thing I wanted to point out, and Brian, I'm sure you could hammer on this as well. One of the reasons I wanted to discuss this on the show is people always forget. They think if it goes in the money, that's when they will be auto-exercised. And that is indeed the case. If it expires in the money by even a penny, you will be exercised automatically. But remember, you own these puts. If for some reason, it sounds like you think this, Stute, the stock's going to drop quite a bit, but maybe not all the way to $5.50, but maybe enough for you to not want to be long the stock, but certainly be shorted at $6, it might make sense to exercise those puts. So even if the stock closed at 602, you can still exercise, though. You can contact your broker and say, hey, I want to exercise these. And then now you can go ahead and get your short position if you want at the 6 strike, and hopefully get a little bit of a drop to pay for some of those puts. So this is an option, pun intended. Everyone forgets out there. If you're long options, you can exercise those at any time. Now, usually it makes no economic sense to do so because you're surrendering all of the time value that goes along with those options. In this case, they're about to go the way of the dodo anyway. So maybe it makes some sense to have a short position on that strike going into the after hours. Brian, what do you have to say here for Stute and anyone else out there who may be in a similar scenario and doesn't really realize that they can maybe exercise their puts at any time if they want?
Yes, you can, but you do have a certain time period after the close in order to get that exercise notice in. And it's basically, in a lot of brokerage firms, it depends on the working hours of the operations. So I would do it as soon as possible if you were going to do it. Like, in other words, the market just closed and I see it's at 602. Okay, let's call my broker and do it right now. In almost every brokerage firm, I'm sure there's a few out there that you might be able to do it online, but if it's after hours, you're probably going to have to call. And you do have that right, just like Mark says, to be able to go on out and exercise and sell. And in this instance, it looks like he was trying to capture 2 cents. Am I reading that right? It's a little bit confusing overall, but that would be possible to buy the stock, exercise, and sell that underlying after hours, if you would like to. That is possible to do. Now, where this comes up more often than not is if there's a big news event. It's not a couple of pennies. In other words, stock companies like to announce big news events after the market is closed from time to time. And that's where this situation becomes a little bit more interesting to add some flavor to this. And if you're on the short side of things, that can be very painful overall. But if you're on the long side and you have the control, you have that right because you paid for that option contract. You do have that ability. And it's usually about, I'm going to guess, about a half hour at most brokerage firms to get your exercise notice in. But you want to make sure you check with them and just do it as quickly as possible. That would just be really my word of advice.
Yeah, you definitely don't want to mess around with it. It kind of varies on the brokerage firm. Brian, do they have to call Ally to get it done there? How is it done at Ally?
Yes, you do have to call. You cannot exercise your option contract online. And it's amazing just how infrequent exercises actually happen. Overall, a lot of people think that when you're buying, especially beginning option traders, think that when you're buying options, you're eventually going to exercise them, either to buy the stock or sell the stock. But most of the time, they just get sold in the marketplace. So, yeah, you do have to call, and we do have to be open. The operations department has to be open. But when the market's closed, you usually got about a half hour to get that call in. But so once again, my word of advice is just do it sooner rather than later.
Yeah, at this point, if you do for some reason think your stock's going to drop and you got these puts that are going to go out worthless anyway, and you're convinced in your market outlook, maybe it might behoove you a little extra swing of the fences there. You get a little extra last minute value out of these long options. You paid for them; they're going out worthless. maybe you get one more swing at the bat there. But as long as you're comfortable with all the risks, don't just do it, try to get that 2 cents. By the time you get all the work and the costs involved, that's not going to be worth it. But if you're thinking like $1, which it sounds like you are here, that might be worth doing over here. Next up, we got SPC EBG. I have no idea. Space Verge. I'm not sure what he's going for here. They want to know, is there a benefit in roll down call option and increase strike price in order to double the contracts? It seems to be beneficial, especially in a bullish situation like Apple. I have some Apple March 160 call options that I can roll down to Jan and increase strike price to 170 so that I double my contract shares. Thanks. Well, again, it's a little bit of some mixed terminology here. What you're talking about is a roll here, Space EVG, and you're saying down, but actually what you're doing is rolling up and out. You're rolling up to another higher strike, and you're rolling farther out on the expiration chain. So there's no down involved. You're confusing yourself. You're up and out. And this is, a very standard practice. Now, not for the reasons you described, though. Usually the reason people do this is they have a position on. Maybe it went their way, maybe it didn't, but they still have the outlook that there's more bullish upside ahead. So they want to close out that one position that they have and then put it on again at a higher strike. They don't always do it just because they can get 2x the contracts. That wouldn't be my first. You'd have to have the outlook first. So you don't mention that here if you think Apple is going to continue to run up. But if you think that, then that certainly is one use case. Brian, what are your thoughts here on Space VG, who wants to know, should he roll up and out in Apple? And also in your parlance, you're talking about rolling and adjusting a lot on OPR. When do you consider rolling a call versus just taking it up?
All right. Well, there's a lot to unpack there, right? So obviously a screaming bull. If we're looking at 160 call options, well, they'd be kind of fun if you had them before the split, but I'm assuming that he's talking after the split here. And so those are out of the money call options on Apple right now. So to sell those, which you may have a profit on because of the way Apple has moved, and to buy more contracts at the 170 level, that is an extremely bullish way to do it. I see more people in this instance where an option contract would maybe get in the money a little bit. In other words, like Apple right now closed today, it looks at 131. So let's say we had the 125 strike call where someone would actually take that 125, sell that option contract, and get a little bit more acceleration by buying an out of the money call option. And a lot of times when people do that, they'll actually take some money off the table. And then once again, you would be really speculating to the bull side in the Apple position. So does it happen? Yes. Your scenario that has been laid out inside the question is an extremely bullish scenario. But people do it overall. So good luck with the upside on it. If you're going to do that situation, you're definitely going to need a big move in Apple.
Actually, I may have misread his question. Maybe he is technically rolling back because he says he has March 160s. He wants to roll back to Jan and up to 170. So I kind of misread his question a little bit there. That's even more surprising. And you're right. These strikes are
back. Okay. Roll down, roll back. I got you. Yep.
These strikes are pretty optimistic. You're right. 170.
So well, let's just comment on the one thing that we are doing here is you're giving yourself some more time. So we're going from March to Jan. That's a pretty big jump as far as expirations are concerned.
I'm assuming he means backwards, don't you?
Oh.
Yeah, that's what makes it a little bit funkier.
All right. No, I didn't assume that to start. All right, I understand now. Ooh.
Yeah, I think ooh is the right response.
I got you. Yeah, I got it. So we're going down and we're going backwards in time.
You're going up and backwards. It makes it even weirder. Yeah, all sorts of weird. First off, these strikes are so outlandish there, Space EBG. I'm not sure why you chose to aggregate on these. You already have a pretty good time frame and very outlandish strike. At that point, 10 more handles by 3 months earlier. Is that really what you want to do? I don't know if I would be on board for that one. Maybe write in with some of your outlook as to why you're thinking this. But I apologize if I misread your question earlier. That is a little bit different than standard rolls usually are up and out, not back and up, which is a little bit different. But as you point out, it's a shorter time horizon, farther out of the money option. So you can put more on said strike if you were so inclined. It sounds like you're super bullish on Apple. So I guess if you think it's going to be exploding past 170 by Jan, it might make sense, but it's not my favorite trade. I like to hear more about why you established it to begin with, why you chose those strikes and months, and then and your outlook going forward, then we can play around with it a little bit. But we can talk about this one all day, Brian. We got a few more people who want to get on here. Let's go to ILN. ILN wants to know, I'm really enjoying the earnings season trade ideas. Any chance Brian can continue these outside of earnings season as well? I find them to be an interesting thought piece and also very educational. There you go, Brian. A little more love from Ilan, who likes the trade ideas, sir.
Well, that's good because they're all supposed to be educational. Everything that we do on Options Playbook Radio is not really meant to be a recommendation. We're really just trying to learn. And I really do appreciate it. And it's very interesting that this question comes in right now, because the reason why we sometimes talk about earnings is because we're chasing volatility. And for example, we have always looked at Amazon mainly because it's an extremely expensive stock and it's got volatility. So both of those two things add to the price of the option contract. And then Amazon seems, and they're not always going to do this, but for the last couple of years, they always announce on a Thursday. That means you have 1 day for your option contract to live. And those very pricey options, if they're out of the money, they have to get to zero. So it's just a very interesting way to think about trading out during the earnings season, that earnings report, that known event creates. Now, can we do some of these outside earnings? Nowadays, yeah, you really can. Why? Because the implied volatility just won't come out of a lot of these underlying stocks. You don't need an event like an earnings to do some of these strategies because the vols are so high. Mark and I were talking before the show here about the VIX, the fact that the volatility index just won't come down. We had a new high in the NASDAQ, a new high in the SPX today, and the VIX is still above 25%, and it keeps going up. It won't come back down below that 20 level. So when you have higher implied volatilities on any of these underlying stocks, that means that scenario that earnings will create in a quote unquote normal market can actually be found all over the place now. So I will focus. I'll try to do that a little bit. We'll be doing some strategies. Next week we'll be looking at a strategy, and our earnings are pretty much over with. So maybe we'll look at a couple of these trades on newly volatile stocks and newly high price stocks since the pandemic. Thanks for the suggestion.
There's certainly no dearth of options, pun intended, out there, Brian, to choose from. So that's the nice thing about an unprecedented year like 2020, right? There's no shortage of options to choose from out there for names like this. So that music means you're coming up against it, Brian. But let's see if we can finish up with a couple of quick hits to keep the mailbag from overflowing even more until our next huddle. First, we got Max. Max says, I think OPR should be daily. Well, there you go, Brian. A big vote of confidence from Max. What do you think about his daily show request, sir?
Job security. That's what I think about. These times, it's always good. So, yeah, I do like the concept of doing it daily. And it's a fun show. I enjoy doing it a lot. I enjoy thinking about what the new trade's going to be for the week and trying to educate as much as I can. I mean, I've been doing this for a long time now. So, it's a thought, Max. We'll put that one in the back of the mind, and we'll think about it. Maybe we should do a few more.
There you go. OPR Daily. Hit up the higher ups over there at Ally. Tell them you want Brian in your ear holes every day. Let's see.
Maybe we'll start doing the daily when we get the daily options.
There we go. We're not that far away from it now, Brian. We're getting close. So
we're getting close. I know we are.
A few more days
that expire every day.
A few more days in there, and we're pretty much there. All right, we'll wrap it up with some love here, Brian. As if you didn't have enough love already on this episode. This one comes in on the YouTubes. This comes just from Stevens, plural. Stevens, plural, says, he was replying to episode 318. He did a skip strike butterfly United Airlines, and he wanted to let you know that he loved it, Brian. So there you go. A little bit of love from Stevens. What do you say?
Well, and that's good. And hopefully that's a little love for the airlines, too, because they need some love nowadays. So I appreciate it, Steven. It's always great to hear from our listeners and get this type of feedback.
Well, Brian, if folks want to participate in a future Huddle episode, or maybe they want to hit you up, dare I say it, between episodes, where should they go? What should I do?
Well, they can always email me directly. My email is theoptionsguy@invest.ally.com. You can follow me on Twitter. My handle is @BrianOverby. And that's going to be it for this episode of Options Playbook Radio. Hopefully we will see you next week, where we get back into some of the strategies based not on earnings this time around. Thanks for coming, everyone.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.